Good morning, everybody. How you guys doing? Right. Let's see here. So I wanted to ask you guys. There's not very many of you yet. People are trickling in. Do we want to keep this format for the weekend streams, or do we want to mix things up a bit? Because I feel like at least the initial part of the stream, we get really hung up with reviewing a bunch of shit that we spend the entire week reviewing already. And I'm sure there's questions outside of that aren't getting effectively answered. So maybe one time only, you guys bombard me with your bullshit tickers and I look at them. Give me 1 second though. All right. Called it. We're getting the Hawk to a stream. No. Did he just offer to look at bullshit tickers and then leave? Well, not bullshit tickers, but I feel like maybe we could squeeze in better analysis on fewer tickers rather than covering the whole gamut of everything. I'd rather you talk about high confidence plays that are going to make money. Well, just because they make money doesn't mean you will, Smooth. Let's be extremely realistic about that. I want a short Marvel. Okay, this is a bad idea. We're going back to the old format. Lulu option strats. Leap calls on Nike. Okay, I said it was a bad idea. We don't need to reinforce that. Puts on U.S. presidents. Yeah, it's puts on the future of our country. It's more likely. You don't want to spend the whole time saying, I don't want to look at your shitty bio penny stocks. Yeah, that's true. Hello, Girk. It was nice seeing you in my dreams last night. Okay, cool. Lulu barely has any open interest on its options chain. CC and CSP strats on UGI. Again, there's like no liquidity. Yeah, the options chain is weak. It's a utility. I mean, most like high dividend yield stuff is not going to have a very liquid options chain. Those two things generally don't go hand in hand. There's a few exceptions, maybe like PBR or something, but I'm not interested in your shitty tickers. But if you have something like something you're thinking about that maybe you've actually done some research on and you have a plan, then I mean I'm always pretty willing to review those at least, right? Just talk about EPAM mooning. there's been news that there's Trump's private jet is is parked somewhere. Um, we need a thesis? That's discriminatory. Well, I mean, if you're not willing to put in that much work, I don't want to look at it, right? That's like the bare minimum of effort. I see you're looking to shorten the stream by entertaining our well research plays with actual potential. No, I just feel like going like rushing through the memes in the Mag 7, right? After like a 10-minute intro gives us way too much information, way too condensed, and I don't see anybody taking advantage of any of it. So, what's the point? Like, how many of you guys have really been just, selling fucking bull put spreads on Apple for the last 4 weeks? Do you still calls on Gamma Max SPX monthly or weekly or both? Generally, Gamma Max is way too far out of the money on SPX to sell calls against it. I mean, for any kind of decent proceeds. I mean, if we're close to it, sure, yeah, probably more aggressively too. But usually, it's 200-300 basis points like out of the money. Is there a safe alternative to U.S. Treasuries? I mean, there is no alternative to U.S. as far as like safety is concerned. There really isn't an alternative to USC. There's other government bonds. I mean, they are all considered relatively safe if they're from, a stable country like gilts or, German bonds, stuff like that. Those countries probably aren't going anywhere, but they're not as safe as the US historically. Could you please share with us how to exit manage intraday butterflies on SPX? Hmm. Like, like you're just trading them intraday? Can you be a little bit more specific about the strategy? I mean, there's not a lot of management there. It's already like a hedged position, right? Exiting them, I mean, ideally when the leg you're selling is profitable, or buying to close is profitable. Did you have anything sold on Apple when it ripped at their conference? No one saw that pump coming. Yes, we did. We talked about it on here, and I was long Apple from the week before. I mean, they were going to announce AI. It was like the most bullish thing they could possibly do, right? Or it wasn't going to be. But yeah, I mean, I think Pickles picks the week before was like 14 DT or 21 DT long Apple. I feel like that one was super obvious. The fact that it's held up this long, despite the fact that they can't deploy any of that stuff in Europe, has been kind of surprising. But the options chain is still really supportive. Assume we're in a position. Oh, okay. So I mean, here. And you know what? Actually, need to. This is kind of what I was trying to do anyway. Is that I feel like the member stream should be more about trading, and like the analysis shit should be just part of Pickles picks, right? Because that's where I'm doing. That's where I'm doing the analysis stuff anyway. And I feel like a lot of times I'm doing the weekend stream and then just repeating myself in Pickles picks. And that seems like a waste of time to me. So yeah, we can talk about this. I don't know why you're doing this, or well, why you need to manage them. But let's say you're in one intraday, right? What's your plan with these, right? Like, I mean, you have a range of profitability, and as the day progresses, that's going to collapse around your sold strike, right? So as more and more of the day progresses, you're going to pull back towards that strike, right? And that's where your peak profitability is going to be by the end of the day. Generally speaking, your risk to reward should be very high, because your chance of profit is usually your chance of max profit is usually very, very low. Manage because contingency planning. Okay, I mean, I'm not sure really the benefit of trying to trade these. I can see ending up in one because you were in another position, right? Like say you sold the bull put, right? But then there's too much like price action occurring within your spread, right? And so it's getting to be the end of the day, and you're probably going to lose money on your bull put spread, and so you open up the bull call to minimize your max loss, right? That's a reason to be in one. I'm not sure why anybody would ever trade one. Usually you just open up butterflies and cross your fingers. They can be, I mean, it's selling offset like short, well, condors basically. can be advantageous, like closing them on chop. But that's only really beneficial if you're pinned to like a major strike, right? So like sometimes when you guys look at that, like that gamma, like the gamma in the morning that I post, you'll see you have like one really big fucking strike, and then everything like to either side of it's kind of just falling down, right? So you have all of your open interest is really just like sitting right here at one strike. And sometimes, this is how things look going into the end of the day as well, as options fall off. And this can be a really advantageous situation to sell butterflies in, because it's very likely that either direction that the price goes, it's going to snap back to that strike. And so if you're short that strike, especially if you can sell it here or here, um, Jesus Christ, that was offensive. Um, on the outer ends of that, you can get an exceptional amount of credit with very little max loss. And, if it lands back at the strike you're looking at, like say in this instance, 54.60, you will make max profit, right? There's a fake Gurk making friend requests in the Discord again. Be aware, everybody. Huh. So I don't know if that helps. Need to. Okay. All right. Does RBLX look like it's gonna break 38? We can take a look. Mm, there's a decent amount of interest out to 40. Most of that appears to be pretty short dated, so a good amount of gamma. I think it could definitely test 38. There's looks like resistance from like 39, around 39, and then a decent amount of interest open at 40. So yeah, it could. It seems reasonable. I'd say it looks like a lot of people are betting on the gap fill, and then there's a little bit of interest at 40, so it could technically exceed 40, especially if more interest were to pick up. How do you determine a half signal level from spot? If I want to sell bull puts or bear calls at 2 SDs for what should be consistent income, how do I determine those levels? So you're gonna need spot price of whatever you're selling against, the implied volatility. You can annualize it, or you could just use like the number of days out you're selling. So like you use like IV30, right? And you don't have to solve for like square rooting the time frame. But if you're gonna sell like 45 and you don't have IV45, you might want to. And then the options like time to expiration, in order to annualize the volatility to the time frame you want. And then I think it would be like spot plus, whatever you determine your volatility is, right? Times, is it sigma tau times spot? So times sigma times your time to x, so your variables sigma. Sigma times time to expiry times spot. And then the lower band would be spot minus your implied volatility times sigma times time to expiry times spot, or sigma sub time to expiry times spot. So like so if you wanted to do like two standard deviations, right, and IV30 on SPX is, where is it? There we go. 10.47. So you would do like spot times, oh no, I'm sorry, spot plus 2 times sub 0.11. What did I say it was? 10.47 times spot. And then for the low, that'd be like upper, and then lower would be spot minus 2. Like that. I'd like the question. Oh, I had to think for a second. Fucking haven't had any caffeine yet. Please, 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 can you show? Oh, wait, hold on. I think you should do whatever's best for you. It will save you time. I learn every time you speak, so I'm good with however you structure things. Okay, I mean, I just want to mix things up a little. It gets boring doing the same shit every week, right? And I feel like there's other questions that need to be answered, and a lot of people are shy about asking them. And so maybe giving maybe half an hour or an hour. Like me and Dork and JFresh can always poke through the Mag 7 when they hop on, right? And kind of talk about that. And then if there's relevant plays in the Mag 7, I can just post them to Pickles Picks, right? If there's something that's like high confidence, which I generally do anyway. So it seems like a waste of time to do it twice. And then yeah, I think giving people an opportunity to ask those questions is good, and they exist, obviously. Catching up, how about a segment where you talk about credit spreads, sell side opportunities, and then we can ask questions about managing those strats. Well, I mean, credit spreads are generally fixed risk, right? So there's not a ton of management you can do on them. There is some, although I will warn you that outside of algo trading, it can get pretty complex. It's better just to have like a stop. If the spread's not going your way, just get out of it. Um, Very rarely and only on specific instruments do I think they're worth hedging, right? And like protecting your spread, like SPX. If there's like a big news event or something like that, you might want to like buy the debit spread side of the credit spread you sold, right? In order to protect it from getting blown out. Something simple like that, right? But generally speaking, they should just be closed. That's really the best way to manage them most of the time. The idea that you need to like stay in them and try to like grind out some profitability over time is usually just a big waste of time. And then, you've got to factor in what's that effort worth to you and what's your own time worth expending all of that effort on something that's probably not going to end up being very profitable anyway. If you need to hedge it at any point, it's probably not going to end up being a great position, especially on the sell side, right? If you're just wrong about the direction of the market, um, you're probably better off just closing. But we could talk about sell side opportunities. I mean, everything constantly has a sell side opportunity if you're smart about picking the levels. So it's difficult to be like, oh, this is, with the rare exceptions of, like things trading above gamma max and stuff like that. Generally speaking, there's always some sort of sell side opportunity available. And really being above gamma max just adds confidence, right? Like maybe a lot of confidence, maybe not a lot of confidence. It really depends on how much the underlying is influenced by its options chain versus, active pressure, right? If there's tons of buyers on something and they're snapping up delta like crazy, gamma, like it doesn't matter if the market maker is selling gamma on the way up, right? And we've seen that a lot this year with we in prior years we don't really see that very much. We see gamma max acting as a fairly strong resistance on most stocks, but on this year, I mean, we've had so much ETF fund flow, right? You've got all these short call ETFs that are driving everything. And you've got just rabidly enthusiastic investors, right? So, we've run into a lot of situations where stocks have gone over gamma max and they've stayed there. They might not have improved a lot beyond that point, but they've held above gamma max to the point where gamma max actually rises up to meet them. I mean, eventually that does mean it'll probably go down, but it takes a lot longer. I'm generally working on improving entries, and patience was the number one factor. Other than buying calls at resistance and higher low, puts at R plus lower high. Any other tips on entries? I mean, are you scaling entries? That's usually the next step. Once you've identified, where you don't have to play reversals, you can play continuations. I will say that what you're saying there, it sounds like you're pigeonholing yourself into just trying to play reversals. And for intraday trading, that's not necessary. And very frequently, continuations are the better play. Friday is a really good example, right? Like, I think it was, you'll probably see this on the 5 minute. There was the 175 resistance, and I was like, if we slip 175, right, we're probably going to fail, and that's what happened. It was very slow, right? But you could have bought, puts, anywhere after the confirmation of the failure, right? Um, and then profited, right? You didn't have to like, if you jumped into calls there, you would have gotten probably burned pretty hard. So not it's not always a reversal, right? I think a lot of people get really caught up in trying to play reversals because the payout's so big, right? You get these massive like 3-5x moves on your options contract on a really strong reversal. But generally speaking, reversals are really hard to play. Everyone piles into them. The spreads get blown out on either side. And you tend to you're actually more likely to lose money on them than make a lot of money on them, right? Because if you go down to the 1 minute, right, what happens at that reversal point, that initial one, right, is all the bulls short the fuck out of the put. So if you were long the put, the value of your put's going to just tank, right? And then they're blowing out the ask on the call. So the calls get super expensive really fast, and then that got defeated, right? So if you'd gone long here, you would have overpaid for the call, and it would have been worthless as soon as it rejected, right? Because then they're going to start, like, as soon as it rejects, they're going to flip and they're going to start buying back the short put, and they're going to start selling the call, and the value of the call is going to tank, right? And these are algorithmized trading that's going on there, right? And it's way faster than you. And you can very very easily get burnt, right? So unless you're willing to like wait out all of that, right? Or you're willing to buy in when things are like, there is a buy-in here that's really good, but it's back here when it's just really choppy and kind of trending up. Like, this is the point at which that put option is going to be at its cheapest, right? And so, yeah, I mean, don't get hung up trying to trade like those sharp reversal points, because you could have like, within reason, you could have just gone short, through this kind of bearish consolidation. And then if it broke out, you stop, right? And then if it fails, you're profitable enough that you don't have to get stopped out on this. Or you can get just stopped out partially. And that's where scaling also comes in. Scaling into positions is a thing, right? You don't want to just, over average down something that's clearly a loser. But if it's staying within like 50 cents or $1 of your buy-in price, right? And just kind of chopping, but you're still pretty convinced on the direction, you can keep picking up a couple more options, right? And then that allows you to also take profit while playing the continuation as well, when and if the price direction you're betting on is realized. Right, so then you can close like 2x options here. You can close two here, and then we have like one runner, and you can kind of see where that goes, right? But you still made money on all of them. Please, 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 can you show how to enter and exit long straddles, e.g., how to look at volatility chart? I'm profitable with 1 DTEs, but it's a lot of management. I fail with the 3 to 5 DTEs. Interesting. Okay. I mean, I'm gonna be pretty straight up with you. Most nights, it's very obvious where to close your straddle, right? Straddles are already underpriced. right? Due to the insane amount of short straddling and short strangling that goes on, they tend to be very cheap relative to the overnight move. I don't look at like the volatility chart very much. I mean, one DTEs you generally are paying a lot more for volatility than you would be on 3 to 5, but in 3 to 5 you're paying a lot more for theta, right? So yeah, if you have the one DTE straddles can work, you can use them. They're just a little bit more slippery, right? They price up and price down really fast, and it doesn't give you a lot of time to get out of a larger position. But I mean, if we use Friday as an example, right? And it's really you just close, write it open. Why the fuck would you? There's like it's just rockets up, right? Your calls are your like by the time it opens, your calls are already paying for your puts, right? There's no reason yet to close your puts from the night before because you're only like $5 up, and then the calls just basically didn't stop increasing until you got up here, right? At which point, the puts are more than paid for, and so you don't really care what happens to them. And even if you close your calls late, you just leave your puts as runners, and then that's the advantage of having the theta on them, is that you just need a mean reversion back to open over like the next 2 days. Now weekends are trickier. You need more theta to cover weekends, and if you're just starting out doing them or you're not really well capitalized, it's probably better to avoid weekends. And then the other reason I don't do one DTE is you have days like this, right? Where you just nothing fucking happens at all, and you'd get blown out if you have one DTE. Like you're really not going to be able to get a profit on either of these. And then if you do have to carry dead legs over a day or whatever, you can always sell stuff against them, right? So say it close here, you're holding like the 54.60, right? And you do eventually manage to get out of the call side like towards the end of the day. The next, like, you can sell intraday if it doesn't look like you're going to get back to your level, and it does, right? It opened lower, but let's just say that this is flatter than it is, and you're unable to get out of it. You can sell like the 54.65 zero DTE against it, right? And that's going to cover a lot of your premium and theta loss for the day while this sits out of the money. And you can do that every day, right? And the same is true on the opposite side for the calls. This did actually open lower that night, and then both sides of the straddle had a pretty decent range from the prior day, but not every day is going to give you that opportunity, and you will have flat days, and you do have to manage them. But generally, like through selling the calendar spread against the two open long positions, right? Skimming memes and mags. No, I mean I'll probably cover GME and a couple Mag 7 before Dork and stuff hop on, but I do want to get some like actual trading questions in. I feel like it's good to talk about these things and also gets people talking about these things. If there's a fake me, I will never here, let me say this to anybody who's new. I will never ever ever send any of you a friend request. Those of you who I've sent friend requests to, shut up. I take advantage of Apple and Tesla all the time. You're an exception, Willie. Never the rule. More trading questions. Let's doomsayer macro. Hey, listen, I don't write the fucking macro data, all right? All I can do is analyze it. It's not my fault that you can't separate macro analysis from the options you buy. You should learn to do that. It'll make you a better trader. I can be more specific. People need better understanding how to use butterflies as an alternative to trying to trade chop. Condors are probably better for that. And a better understanding of whether to be on the call or put side. Like what do you mean? Like put butterflies? Like short put butterflies and short call butterflies? Those are generally going to be the same. There's usually not going to, I mean, puts might have slightly higher premium most days, but it's going to be negligible. I don't really know if trying to trade chop via butterflies is very profitable with commissions. Maybe use the weekend stream to show us how you do analysis for the next week on a stock that you've talked about on stream. No. It's been 3 years, Yaga. You gotta know by now. I'm not scaling, it's basically timing. 5 different entries and exits on a single contract of SPX across the 2 hours I have before work. Okay, well, I mean, scaling can still be beneficial there. Was that bearish consolidation you were referring to on SPX because it didn't gain momentum? Or do you look for increasing bullish volume on ES at the same time, seeing weak upside on SPX? I mean, that's just like textbook bearish consolidation, right? Like a breakout, like a slow breakout of the. There was bullish consolidation at one point, right? But it was very short lived, and it was like right here, and then you got the breakout, right? But the breakout was very low range, right? You didn't break out exceptionally above the consolidation, right? You stayed within the prior high. And then when you did break out, like there wasn't a big move up or anything. So yeah, no momentum gained. Volume on ES is probably declining through the same period. And it's the range isn't picking up, so you're not really getting a true breakout. And that's when you shift from that short period of bullish consolidation, which only lasted like 5 minutes, into bearish consolidation, which is upward consolidation, right? Bearish, bullish. How make for do money? Hmm. You've sent me half a dozen what? What are your thoughts on what appears to be rotation into IWM while yields pump relative to the rest of the market? I don't think there's any rotation into IWM. It still doesn't look like anybody's long Russell at all. Russell's still got a little bit of positive gamma. And there's like a lot of near-term short calls that get squeezed out once in a while, but it's stayed below gamma neutral for like fucking 2 months now. There's like no bulls there. I think Friday it closed with negative charm again. I think there's a little bit of sector rotation into things that are like defensive, but I don't think Russell has a lot of defensive stocks right now. Dow, maybe, like Dow transportation and stuff like that. But that's a really big assumption to rotate into those kind of like discounted sectors, because I don't think we get QE, right? And that's what you'd be betting on if you were risking off into like utilities or materials, industrials. Like you're betting that QE is going to come in and support a a recovery from a recession or from a period of economic decline. It doesn't necessarily have to be a true recession, but you're assuming economic decline or a pullback in margins on like the major sectors like tech and tech services, right? So you'd go long commodities, industrials, energy, utilities. I think we're still just getting a lot of risk off from China, or from Europe rather, and that was pushing yields down, and now they're bouncing back really hard. No problem. Tony KL45, welcome to Zillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the stream, or added to the country club after the stream. I've been in AVPT since 9:30. Shares only. I'm getting scared that it's overextended, but my MA cross exit signal is nowhere near. Would you keep holding AVTP? PT. Okay, I got it right. Data processing services. It's a pretty good reversal so far. It looks like, it looks like there's probably going to be some sellers, or maybe around 11. It already got, I think, like the bigger sell off here at about 860. But yeah, this is very much like a cup and handle. So at some point you're gonna get the handle. And yeah, usually if you're using MAs as an exit, you're gonna get a less advantageous one when and if a handle occurs. But that could be as high as $12, right? Before you pick up like a lot of willing sellers. It could be here, right? It's perfectly reasonable that it could be at like 1073. And if you just want to go from the technical side of this, I don't know why the price is improving. I don't know anything about the stock whatsoever. It seems like they got like an award from Microsoft for partner of the year. They seem to be doing good, and in a sector which can tack on some pretty extreme multiples really fast. Um, and they are not unprofitable. They do have earnings coming up. That's going to be a big risk, especially after so much near-term price improvement. But if they get a continuation of their increase in margins quarter over quarter, that's probably going to be pretty bullish. Like they had a little dip last quarter, margins fell back negative, but if they have like net margin moves positive again this quarter, and they beat the kind of low analyst estimates, I would say that that could be like a buy for another leg up. So maybe think about how to protect yourself against any volatility coming out of earnings. And then decide, do you want to see if the cup and handle like part of this plays out, right? So yeah, are you prepared to hold through like a quarter of pullback? If you're in at 930, I mean, you're not really sitting on a ton of gains. Maybe you just want to take profit, right? Like you don't have a lot of padding. I can't tell you whether to take profit or not. That's gonna have to be up to you, but that's what I'd be thinking about. I'd probably be scaling out a bit. Can you give some examples on how to sell theta as a strategy? Sure. I mean, the two easiest ones are always going to be like covered calls and CSPs, right? Um, but you know, there's condors, there's butterflies, there's short strangles and short straddles. Um, there's spreads, there's bull put and bear put, and you can use any of those as a strategy to sell theta. I mean, you can like even debit spreads, you can open them in the money. Like if you think a stock's gonna go up but not a lot, you can open like a debit spread that's where the long leg is in the money and the short leg is out of the money. Um, and like the short leg can be at your PT, right? And you can just hold that into expiry. Um, those are a little harder to time, but I mean that's still you're still selling theta at a profit there. There's also you know your bear call spreads as well, right? And then you have diagonals and calendars where you can make a lot of money off of the decay in theta without as much exposure to the price action, or you can play like longer term reversals and stuff and end up in the position you want to be like a month or 2 months out. So all of those are pretty effective. I mean, you've got to understand how to manage them. On Friday, you noted the change in gamma max points and sold calls, failing dealer delta, slightly increased gamma, and heightened Vega exposure, all of which pointed to limited upside moves. Well, not limited upside moves, unsustainable upside moves. The range for an upside move on Friday was quite high because especially in the morning because all those calls piled in. They bailed, right? But they were there. And we had calls that were going all the way out to like 55.70 at market open. Um it was just that the price action above, well, I mean, price action above Vega neutral is generally unsustainable anyway because the MM is a constant seller of delta. Charm and options purchases indicated marginal short-term support for upward movements. Does this indicate more bearish sentiment all overall or more sell-offs of Mag 7? I mean, on the macro side of things, it does look like people are pulling out of like the Mag 7. And I think really you have to look towards the like dispersion there. And we're starting to see, a lot of shorting of volatility um, further out on the Mag 7, right? So like 3 month IV is coming down, but it's being held up in the short term by increased dispersion trades within like 30 days, right? So um, they're going like long vol in the 30-day window and then short vol in the 90-day window. And so it's kind of like they're propping up the price, and that seems to be against aggregate selling, which means like, yeah, in the long term that's definitely an indicator that things could get a lot more bearish very soon. But all of that money can come rushing back in, right? If conditions were to change substantially or rapidly. Um, so I mean, yeah, but it is a sign. Yeah. This is how institutions exit, right? is, when they're getting out, and Wyckoff is actually something you should read, because I think everyone should read Wyckoff. You don't need to apply it to everything, but you should understand the way institutions think, because they both have the ability to drive the price up, and they have the ability to hold the price up, right? Which means that they are always the buyers at the most advantageous spot, and always the sellers at the most advantageous spot, right? And so, when banks are exiting a position, and SPX is actually a great example of this. We can, when big banks and dealers and everyone are exiting a position, it will always be, distributive, right? You will see price action like this as they get out, right? It's now range wise, it's not huge. There's not a ton of range. Um, and they are exiting throughout this entire period. And then when they're out, they simply just let it fall. They stop holding it up. And the derivatives market is definitely where they execute a lot of that. Believe it or not, Nvidia is Wyckoffing. Yeah, I can see that. But that would also imply that Nvidia is going to trade here for a very long time, or within this range, right? I mean, you're not wrong, right? If you consider like October, like 2022, like October 22 through 23 accumulation, right? And then kind of started stair stepping up, and then new price value, like new price realization, and then even more price, like improved price realization. Eventually, it's gonna hit a level where no one wants to buy it anymore because it's way too overvalued. How close are we to JFresh's crash, or is it Doric's? Well, those were both last week. And since we didn't crash, it was Doric's. Honestly, Pickle Tickler, I'll probably never go into my process and workflow for valuing equities, because A, I don't want to ever try to teach it to anyone. B, I'm not really sure I could teach it to anyone at this point. I think it's much better anyway to develop your own systems for that, and to build out your own models and find what works for you, um rather than trying to copy someone else's. I think that's actually a big problem with like value investing, is they all just sit around and pontificate over, what would Buffett think, what would you know Peter Lynch think, and they go through like each of their valuation models, and they all sit around jerking each other off and ultimately never make any money. They do shit like buy PayPal at the bottom. They really lean into the assumption of efficient markets. I think that's a terrible idea. Me? You're describing me. Are you a value investing regular? I'm sorry. How sweaty is the inner vein of your hat? I'm not sweating at all. You think I sweat in my hats? I don't. It's like everything else with investing. It, you need understanding, right? You need to understand companies, how they work, how they run. That's going to do more for your ability to assess a company's value in its future than looking at somebody else's model or using DCF, right? I'm an R dividend investor, which is why I own Nvidia. Every time I go on R dividends, I'm just so sad at how little yield they make on their money. They're all just in like SCHD, making like 3% a year. It's fucking embarrassing. I mean, I put like no effort into my dividend port at all, and it's what 5% yield at least, maybe more. I could look. I don't remember what it's at right now. Ooh, I got more money from TLT coming up. Nice. Yeah, I got 6.82% yield on cost, so 5.06% portfolio yields. There's probably things I forgot to add to this spreadsheet, but yeah, there's a few things. Are you gonna post a current update on your port? I haven't changed a lot in it from the last time, but yeah, it might be about time. What are your favorite dividend stocks? I don't have any favorites. They're all okay. I like AT&T a lot. It keeps giving me money. PBR was good while it lasted. I'm not ready to buy back into that yet. Give me 1 second. Sorry, I got a phone call. JFresh? Hold on. God damn it. What did I do with my headphones? Where's Dork?
What's going on, man? I don't know where Dork is. He kind of left me all alone in my thoughts here. I was
Oh,
just sitting in silence.
that was rude.
Nothing in anyone's butt. It was
Well, that's nice actually, because you
yeah.
made it clear last week. He just talks about that the entire time, so he's
The
prepared.
worst part is really the smell.
it really dampens the room, you know.
Yeah, just kind of hangs in the air.
Yeah, yeah. It's hard to get rid of. Well, I'm also gonna leave you alone for a second. I gotta run out to the hallway and grab something real fast. I'll be back in like 2 minutes. If you wanna
All right.
if you wanna chat everybody up, you can. I'll be right
Now
back.
let's go. Let me. Yeah, sure. Let me pull up the chat and see what people are talking about today. How come you're ignoring me in my members milestone chat? Terrible. Well, I'll read your milestone chat. Where is it? Thank you for helping us all learn, Girk. Been getting a lot better recently. It all started here. Cheers to mostly you, but also Dork, JFresh, and all the PJ. With love, Northern Cowboy. Member for 32 months. How's that? What's going on? Let's see. What'd you guys talk about? Fried chicken. So not stocks. That seems normal. Wyckoff. Gross. Uh-oh. I'm getting ads and they're moving the chat around. How fairly valued is Amazon? How fairly valued is anything right now? Grilled chicken wings, dividend stocks, how to smoke pulled pork, boobs. All right. Nobody wants to talk about my pool? Well, I'm going to talk about my pool, and you're all going to listen because I don't know. I don't know where Girk's hallway is, but it does not seem close. um, yeah, my pool's great. I had to take my water to the pool store like 3 times in a row because my phosphates were high,
Are you,
and I wanted to make sure I put in enough no phos to get the phosphates down. Phosphates go up when you start getting too much growth, so it's not good. That's like the first step to starting to get like a green pool.
mm.
So I got those back down under control, and my water was also soft, so I had to harden the water. Um, pH was pretty good actually. Once I did all that, the water was like, I don't know if you guys
Did
probably
anyone
don't know this.
actually ask you about this, or you just I like it? You're just sharing pool chemical.
No, nobody asked about this. But once you get all that correct, you guys probably don't know this because you don't own a pool, but like the water just looks smooth and shiny, and you can like it's hard to explain. It's beautiful.
Huh.
Uh, my neighbors are having a pool party. Should I go over? I don't know your neighbors. Why don't you ask them?
That's a good. Yeah.
Yeah,
That's.
they were talking about like chicken wings or something. I don't know. And boobs. I read Northern Cowboys member chat for you, so you don't have to.
I appreciate that.
Yeah.
Tips about wrapping our heads around Wyckoff, what to understand, and why is it helpful? Um, it's good to understand how institutions move in and out of positioning, and how to identify institutions moving out in and out of positioning. And interestingly, it's something that really hasn't changed over the last 100 years. And I think Wyckoff, not any of the bullshit that's been spun off of what Wyckoff originally wrote about, and not without getting too in depth into Wyckoff. Right, you don't need to use it for anything beyond just understanding how to identify institutions moving in and out of positioning, right? And when you can do that, you can start to understand it on smaller time scales. You can start to understand it in other markets, right? Like options. Um, and it helps give you a basis and understanding for how large amounts of money are moved around in the market. I don't think you need to use it to try to predict prices. I don't think you need uh, to use it for any other kind of analysis besides just understanding institutional flows and how they work, because they
What
don't really change.
what did what were you talking about before I joined? Why
Oh,
is
so
everybody
so
all up about Wyckoff?
well, so what I did was, instead of going through all the stocks and just boring myself to death before I'm about to bore myself to death doing pickles picks, right? Because I've been doing that like twice a day. I decided to take trading questions from people today. Well, initially I was like, you tell me your stocks and your thesis, and I'll review them. And then they just threw a bunch of shit at me. It was like diarrhea. So I stopped that immediately. But that's off the table now, just so you guys understand that. And then I took trading questions instead. You know,
Huh.
Carl.
Were there any good bankrupt or near bankrupt stocks that were discussed today?
Oh, I don't know. I didn't. I just ignored them.
Oh, okay.
Yeah, yeah.
I'm assuming most of them were near or in bankruptcy.
I assume that most of them were under $10.
Oh, for sure.
Yeah, that's usually, and it went there way too quick. Nobody. There was not like a thesis. That it was just like five questions that were immediately like, "Hey, is this gonna go up, or will this hit $30, or that kind of stuff?" And I was,
So everybody in this chat are just like basically Dogecoin traders. It's so cheap it has to go up.
I hope not. I hope not after 3 years. But I didn't.
I don't
I
know.
didn't see
Did
any.
you? I
I
mean,
didn't see any
after
like
watching,
fleshed out theses where people, had an understanding of what they wanted to buy. It seemed to be mostly like, I want to trade this piece of garbage because it's been going up for 7 days already, and I'm buying the top. Please tell me it's going to keep going up more.
yeah, I don't
Yeah.
know. I kind of wish I had bought some Hakatua coin.
Who didn't? You didn't get in on that?
No,
Oh, that's like the meme of the century.
I heard that she made like $2 million in merch sales, so I don't feel bad that she lost her job anymore.
Yeah, yeah, that's
But
that's
her losing
nice.
her job is still BS. Preschool teachers are allowed to have sex lives.
Yeah. Well, not in Tennessee.
Yeah, I guess not.
Not only preschool teacher, but a woman, right? So
Yeah.
that's Tennessee's maybe not fond
Well,
of any of
actually, the
us.
history of teaching children, it used to actually be a woman's job, which is why there's so many women teachers because it's kind of like historically, it's got some pedigree to it. But the issue is that they would send the women to go do it because the men were all off doing real things, and if the kids were all at school, there's nothing for the women to do because keeping house is hard, but it's not that hard, right? So they need more to do. So
Oh
they would send the women to go teach the
boy, you're
kids.
trying to start a fire right now.
I am a little bit. So the primary issue now is not that women are doing these jobs, but that we have to pay them for it.
Yeah, yeah.
That's the biggest. Anyway, thanks for stopping in this week. See you guys next week.
Yeah, that was great speech, man. Such a welcoming cult. We do our best.
Oh, yeah.
At least we don't pay them equivalent wages, right?
Yeah, we still get away with like 70, what is it, 78 cents on the dollar, something like
Something like
that?
that, yeah.
Yeah. My favorite argument right now about wages and like the workforce is that the only reason that wages are suppressed is because women have diluted the workforce. So it would be better if we could go back to that
To
where
the
women stayed home, where we cut the job workers in half and then wages would skyrocket.
Interesting. This is a very Afghanistanian approach to the economy. So
Yeah, it's
for
interesting.
for women currently seeking an education, would they just have to kick them out of school?
I don't know. I mean, fine.
Oh, okay.
The whole point for women to go to college anyway is just to find a husband, right? That's where all the
You're really
eligible.
mad. You're really angry that your wife slept with Magic Johnson, aren't you? I'm
Yeah, I'm
getting
pretty sure my
I'm getting a lot of hostility coming off of you.
yeah. For people that don't know, my wife went to a conference where Magic Johnson was one of the keynote speakers for some reason, which not related to. I mean, she's a veterinarian. You can look it up as the AVMA conference. And anyway, we joked. It was like, we're you're gonna get AIDS from Magic Johnson. And then, like right before she came back from this conference, she said she was sick, and she's been sick as a dog all week. And so I'm pretty sure that Magic Johnson actually gave my wife AIDS.
So I take it you're still doing the single dad thing. Oh no, I wouldn't have to work anymore and someone else is going to pay my mortgage? Well, assuming that person would want to own your house.
Sorry, I'm because I'm home. I'm busy. My kids all want to come in and bother me with things.
Yeah, of
I
course.
keep telling them to go find their mother, and they can't find their mother. Which also, of course, she's been around all day, but now that I'm busy, she's disappeared.
More like Magic Schlongson, am I right? I
Oh
hate you,
God.
Smooth.
Anyway,
Yeah. Moving on.
yeah. What do you want to talk about?
I don't know. I guess we can talk about stocks.
Mm, yeah, we can. That Friday.
Everyone sold a lot in Nvidia over the last week.
Yeah,
That's
a lot
been
of Nvidia,
that's been
including Jensen Huang.
yeah, well, always. He's been selling like the whole time,
Yeah,
right?
yeah,
Because he doesn't live
because
in
they all believe in
Australia, Bithead. Yeah, they believe
what?
so strongly in their future valuations that they're selling all of their stock en masse. It's kind of funny that the bear case for Nvidia lately in the media has become all of their engineers are retiring.
Yeah, I think that would be a problem.
they're
All their engineers are like
they're yeah,
multimillionaires.
they're suffering from success because everybody with vested stock is getting the fuck out.
Yeah, I really just don't understand. I would love to once all this ends to pick the brain of Jensen Huang and like what his strategy here is. Is this? I mean, the most I can really make sense is that it's just an ego play. He just wants to be remembered as somebody who did something world changing. But because if it's just a pump and dump, like it's hurting him. It doesn't make sense. And he already has so much money, who cares, right?
Yeah,
So I really just don't like you said, I mean, this is so foreseeable. If you just start spouting all this nonsense and then it picks up and then you keep hyping it and your stock pumps, all your engineers are gonna leave because they're rich.
yep. Which they've been doing in mass.
Yeah.
Yeah.
So I don't understand, and it's obviously not sustainable too. And so when it inevitably comes back down, people are going to get pissed off. So I just don't understand what he's doing,
Well,
other than ego stroking.
I mean, I would say it's a twofold problem, right? Like you are fiduciarily responsible to your shareholders. You're not really in a position where I mean, you live your life in an echo chamber anyway, but you're not really in a position to say, oh, like, you know, these valuations are ridiculous or you guys are running away with this, right? You're just gonna lean, like, you're encouraged from all points to just lean into that, right? And that's a lot of what happened during the dot-com bubble is that, like, you know a lot of the C-suite of these companies, they were well aware that they were massively overvalued, but in order to maintain your market share, you kept up the facade, right? Because I mean, at the end of the day, it's up to the market what you're worth, right? It's not your responsibility to moderate, the enthusiasm surrounding your stock. Um,
Yeah.
and
Yeah.
if anything, as CEO, you're expected to encourage that, right? That's why we hate Ryan Cohen because he doesn't. um, in any way, shape, or form encourage any enthusiasm around his stock, right? Um, but Jensen does, right? And he says all the good things about the company and all the great things they're going to do, and that's what he's supposed to do. And it's I agree that most of the things he says are bullshit, but I mean that doesn't mean he doesn't believe them, right?
Yeah, I think he does kind of believe them, actually. I mean, I
Yeah.
do think that he is really hoping that this catches on and becomes this huge thing. I don't think it's going to. I mean, so it'll always be around, and accelerated computing will always have a place and it will grow, but this whole AI thing is out of control.
Yeah, yeah, it is. But I do think the sentiment's starting to shift. I mean, it's obvious that it is. They're kind of moving the goalposts everywhere, right? They're like, well, this isn't going to make us money now, but now it went from this is going to change everything in the next year to this is going to change everything in the next 5 years, and now you've got big companies saying this is going to change everything in 10 years or 15 years, right? And slowly but surely, as those profits aren't realized, those companies are backpedaling, right?
Yeah, I think so. I'm still not sure we're quite at the apex,
No,
and the
probably not.
reason for that is this. I was really hoping by now in the middle of the year we'd have hit the apex, but there was an article that came out in, I want to say it was the Wall Street Journal, but don't quote me on that. They've been more critical of AI more recently, but there's one that came out where they interviewed um, CIOs and things of large companies to see, hey, how are things going with your AI rollouts? And what they were finding is that in general, for the folks that were saying, oh, we have all of this enterprise data, it would be great if we could just let an AI loose in our existing data systems and have them you know, organize and produce it to us when we ask for it.
Mhm.
Things like who's the current, CTO of the company, how much revenue did we make last quarter, and which clients like so and so, right? So these kinds of things are what they're hoping for, and what they're finding is that the LLMs are making all these mistakes because their information isn't either very large or is conflicting, right? They have old information mixed with new information, and the LLM doesn't really distinguish between those things, and so it's giving people old information. And so what they're finding is that they have to do, if they want to get this system to work, they have to do a fair amount of data management on their own to feed it into the LLM. And it's like, well, if you're going to build a whole comprehensive data management system for the AI, why not just cut out the AI? You've got a great data management system.
Yeah.
Um, so that's one of those. But when you listen to the people who paid all this money to get these LLMs and were promised that it would provide them this access to this data in a sensible way, and then it failed to do that, they all still said, but we still believe in the long-term ability of these things and they will get better.
I
And
mean,
so
I think a lot of
they're
that's that
still
they
not
don't
at
want
the
to
point where they've given up.
see. I feel like if they're saying stuff like that, like, oh, we still like that's from a business standpoint, that's not a very strong stance. Like, right? We don't think it's working now, but we think it will work. Feels to me a lot like defending money spent rather than being confident in money spent, right?
Oh, for sure. But I think that there's still this pervasive idea that these systems are still going to get dramatically better,
But are we
ignoring the
are
fact,
we going to see them throw good money after bad, right? And I don't think
right?
we will.
That's okay. Yeah, I was sort of leaning towards it's more of a possibility than not for a little while at least.
Hmm.
But you look at like Anthropic, and I mean they're all talking about, hey, these next gen systems. The current ones cost a few hundred million to train. The next ones will cost. I think there's currently a few 1 billion systems being trained. And there's already plans, in the distant future, 2025, 2026, whatever, to do closer to 10 billion cost for model trained.
Hmm.
And the reason for that is because you have to have an exponential step up in spending to get incremental advances in ability,
Yeah.
right? So
Yeah.
when you're going from, a couple $100,000 to $1 million to 10 million to 100 million, right? I mean, those for large industry that has grand visions, those are pretty small drops in the bucket. So it's almost painless, right? But now we're getting to the point where the expense is becoming very painful. And so, um, you know, it has felt like we are just getting this effortless exponential growth and ability, but really we're getting a lin log growth and ability. So for 10x spending, you get 1 to 2x improvement, right?
Yeah.
So,
That's
and
without factoring in the increase in energy costs too.
yeah, so the energy costs are actually the majority of the costs. Well, yeah, I think they are actually the majority of the costs, even with the exorbitant prices of the chips. But the other issue too is data. We've kind of run out of data, so we've read the whole internet.
Yeah.
There aren't 10 more internets to read, so you can make your model larger, but you're kind of going to get out kind of the same thing because you're putting in the same thing. So you might get slightly more accuracy, but it might become more rigid, right? And then stop being as creative. So there's all these trade-offs, and it's not really clear that we're going to get some dramatic jump, which is probably why GPT-5 hasn't been, even though OpenAI, I mean, the sentiment has shifted pretty strongly against OpenAI. I think a lot of people acknowledge that Anthropic has better models than OpenAI.
Hmm.
And OpenAI finished training GPT-4 in November of 2020.
2.
Mm, yeah, it was November of 2022.
Yeah.
Because when they had released ChatGPT 3.5, they had already finished training 4. So it's
Yeah.
been almost 2 years now, and they still don't have another
I
model.
don't think they
I mean, they
release new models, right? Because the step up, like the promises and step up for the new models is probably so far from the reality of their actual performance that it seems far better to me to just milk what they have for as long as they can um without releasing anything new, because whatever they release is going to be, at this point, even if it was everything they promised, it would still be a disappointment.
Yeah, I think that's right. And I think that's probably one of the reasons why they haven't released anything. It could very well be that ChatGPT 4.0 or whatever it's called was 5, and it just wasn't much better. It's hard to know. But it definitely seems like things are slowing down,
I gotta
and
find this
my brain.
article that I read about Sora, but it was from like this. It was kind of like an opinion piece, but it was from this like Hollywood insider, and they have a really big problem with like the content that Sora creates as this like uncanny valley effect on viewers, because like it's visually like very, like it's got like a lot of like odd artifacting and stuff, um and like to remove all of it apparently is just as expensive as to just make it from scratch. um and so I'm not really sure that's going to be the groundbreaking tech everyone assumes it's going to be. And I've seen some of the like the short AI videos that they've made with it, and some of them are freaky as hell. um
Yeah, I think that's a challenge now, is that because these models don't have models of the world. They're literally just interpolating existing data in a pretty shallow way. So because they don't have these rigorous world models to sort of apply guardrails to what they're producing, they produce things that are otherworldly.
yeah.
And otherworldliness is kind of comes across as macabre to people who watch it. Like, somebody, the first one of the first Sora videos of the lady walking down the street. Once you notice that her legs switch places, I mean, that's kind of just creepy at a pretty fundamental level that somebody's legs swap. So I think it is on some levels, at least at the subconscious, kind of just disturbing. Um, there's a new video that came out. I don't think it was Sora. It was some other competing Chinese video or something of gymnasts, and it came out just a few days ago. But it just go look at it. It just looks like a bunch of arms and legs just like flailing and undulating and appearing and disappearing, and it's wildly unsettling.
They had like a somebody like remastered the Charlie bit my finger video from like the early days of the internet, if you remember that. I'm sure you do.
Oh yeah, yeah.
But like they extended the video with AI, and the two little kids like get up from the chair and then run at like a really creepy pace to like the other side of this like kind of like LSD shifting room, and their heads like warp as they're running. And then all of a sudden there's just this like big like black like phantom like like a dementor just like pops up in front of them and they disappear. And I was like, what the fuck? Like, it was the creepiest shit
Yeah,
I've ever seen.
we call that unstable extrapolation. The farther you get away from the starting point, the more bizarre it's going to be. That's why all these clips are small
Yeah, yeah.
or short, and they're clips of things that don't change a whole lot, right? They can't change too much. But then there's a whole question too of how closely are some of these shots to the underlying training data? Because if they're just mostly regurgitating exactly what somebody put in, then that's not super impressive. Um, which might be the case for some of these clips that I've seen, especially from the Chinese model. It's extremely accurate, but it's all kind of mundane things.
Mm-hmm.
My favorite recent one though is Toys R Us issued a commercial that was made with Sora,
Oh,
and
really?
it's yeah, it's a story of a boy who grows up with a psychedelic giraffe fetish. So Toys R Us thought that was a good commercial to do for some reason. I'm not really sure what they were thinking, but
That sounds disturbing as hell.
yeah. Okay, there's a couple questions here. Why is Vertiv doing so well? Don't they do water cooling? People are just speculating on the needs of water cooling. Just like people are starting to speculate on energy needs for data centers. The challenge is going to be, yes, you can build all of these data centers to do all of these calculations, but if the calculations aren't worth doing, all of that is just a house of cards. It's going to collapse. And actually, before this hype, the industry was not expecting to have to even consider water cooling at scale for another 5 years or so. So they've started accelerating some of that, and I think everybody's sort of on their back feet, not really sure what to do, looking for solutions to try to stay relevant. But I think once the AI craze dies down, all of these AI data centers are going to be more than happy to delay going to water cooling because it's such a nightmare at scale to make sure that there's absolutely no leaks, to make sure that there's no hotspots, to make sure that it doesn't reduce the life cycle of your chips, because the higher wattage that you run your chips, the sooner that they wear out, unless you have really good cooling, because they're just going to operate with higher temperature deltas. So it's still a big gamble, and I think it's mostly speculation, just like super micro. Then there's a question of synthetic data. Synthetic data is a dead end. The whole challenge of the data is the whole challenge is that we don't have enough data to give a reliable interpolation of the world, and it's mostly because the world has fat tails. There's a lot of variability in all of the probabilities of what's going to happen in the world, and the internet provides a very small snapshot of all of that. And so if you just create synthetic data that looks like the existing data, you're going to undercount the thing that you really need anyway, which is data on this fat tail. So I think the synthetic data is just wishful thinking and it's desperation. Then I think healthcare and defense are going to benefit most from AI. I would say probably not, because healthcare and defense have to be correct all of the time. So no, it will not be benefit them. It will not benefit hardly at all from AI. I would suspect. Um, just like people in 2016 were saying we won't need radiologists to study radiographs. Here we are, 2024. Radiologists are just fine, and the AIs they can't read the radiographs with any accuracy better than a human, because they're training on existing human data. Will AI take black jobs? Skip that one. What will Trump do to stop this? Probably what he did last time to stop COVID, which is golf a lot.
Extra golf.
More golf,
Yeah.
which you could tell from the last debate, very important to both candidates. So I don't see any reason
should
to
we
expect that
discuss
to
should
change.
we discuss that? I feel like it's not even worth talking about. It's so fucking
I mean,
embarrassing.
anything. I mean, we need to transition away from AI, or people are gonna pull
Yeah.
their hair out.
Yeah.
So I no, but yeah, if it gets us away from AI,
I mean,
um,
I think we can discuss it without going into the fact that our candidates are shit and
yeah, I think
decrepit
that
and
take has
old
been
and
well.
crazy and criminals.
That
We can just focus
that's
on the effect on the market, and
yeah.
because this is going to be important, and I know we do a really good job staying away from politics here. It helps that we are all focused on markets and on macroeconomics, because it really tells you where the money comes from, and it tends to pull you away from party lines and political beliefs, especially the longer you're exposed to it. I don't know very many people in finance that have been in it for a long time that are politically leaning either way. They just analyze the outcomes of what can happen if one party takes over or the other. And I think for markets over the election season, it's going to be important, right? I don't think that there's any historical patterns or anything like that are, you know, have any kind of statistical reliability. Each election season is going to be unique and have its own pitfalls and its own risks. But if we can get ahead of those and analyze what could happen, I think that's a good place for us to be looking at this over the next few months, and it's going to be important. So, unfortunately, during this period of time, there's going to be no way to completely ignore the politics. We're going to have to look at them. We're going to have to analyze them. We're going to have to address them, because both outcomes present significantly different. Um, uh,
Environments. Well, because
yeah.
like Trump says he wants to politicize the Fed, right, and get them to force them to lower rates.
Well, yeah. I mean, there's effects. The effects on the Fed immediately are going to be very important, and I think people are going to be equally afraid and or bullish on that. There's debt considerations, right? I mean, Biden's been spending like crazy, but Trump could arguably spend way more, and
Yeah,
our deficit really can't handle that at this point, especially if we're not going to get the economic output out of it that is expected.
yeah. I'm not sure how I feel about. I mean, so Biden to me seems more likely to continue to post these really big deficits. Because why would he change anything if he's winning? Trump is a little bit different, right? Because he spent a ton of money, but it was COVID, and so having a Trump without COVID will is a little bit more uncertain. I don't really know what he's going to do.
He
I
spent a
don't.
ton of money before COVID.
Yeah, I
Yeah,
mean they all do,
yeah.
right? So,
Generally, I
but I think
mean, generally Republicans spend like 3 to 4 times more than Democrats in their like first year or two in office. And that spending goes up if the House is aligned. I mean, historically, there have been very few Republican candidates that haven't outspent their Democrat partners, surprisingly. But that's also because usually when Democrats are in office, the House is divided, right?
Yeah. No,
Um,
I get that.
and so yeah, the opportunity to spend is generally put on the Republicans, which is actually more conservative model in the long run. If the conservatives are getting access to the spending and the liberals or reformists are not, you tend to get a balance over time, right?
Yeah.
And
But yeah, I mean that's the thing though. It's like there's only so much of it that's up to the president, right? I mean, Congress largely determines the spending levels, right? I mean, the president can kind of sway that a little bit here and there, but
the president can
the
spend a lot of
machines.
money via executive order.
Yeah, which is what Biden's doing now with um, student loans and things like that.
Tell us about how EPAM is going to pump because Trump parked his jet by a Russian one. You know, as stupid as it is, it could have a big like an outsized effect. Honestly, like if people think that if there's even a chance that Trump could negotiate some sort of terms between Ukraine and Russia, right? Whether he can or not is irrelevant. The stock market only cares about the what if, and if the what if is there, that could honestly it could be enough to move the needle over, especially on EPAM because it's kind of the center point for a lot of that risk that's been priced in, right? And if that risk is seen to be reducing, I mean, remember EPAM traded at like $700 at one point, so it could end up being a very much a buy the rumor situation, right? Where everyone starts piling in because there's a rumor that something could happen rather than an actual event happening. Yeah, I know.
Yeah.
This is why you love the markets, right, Jake?
um, yeah, I think so. But at least in terms of the election, I think to me in the short term, I think sort of the biggest interesting wrinkle that came out of this debate is the speculation that these might not be the two candidates that people are voting for in November. I mean, the odds have dramatically shifted
that
after that debate.
and that should also be something that we discuss is Biden going to step down, right? I mean, there's a bit of pride issue there. No
Yeah.
one's really done that mid-election, right? Like they've been like, "Oh, I'm only going to serve one term. I'm out." That's happened a few times historically, but nobody's, already through the process and then backs down. And I think from a party perspective, a lot of people are like, "Well, I'm voting. I'd be voting. They're kind of rationalizing it by like, I'll be voting for his cabinet, for his policymakers, for his decision makers, not for him himself. Right? He's just being treated as a figurehead here. Which I mean, honestly, the president should probably be treated as anyway. We have way too
Yeah.
much executive power as it is, but I don't think that's a good rationalization. And if Biden doesn't back down, he greatly decreases the chance of the Dems winning again, right? And if Trump gets into and if he does, we're gonna switch candidates. What at like the DNC in August, which means that you're gonna get you're gonna get a lot of volatility in the markets because that's gonna shift things. No one, and nobody knows who that would be. It's probably not going to be Kamala, right? Um,
It has its own issues, right? I mean,
yeah,
snubbing the vice president.
yeah. I mean, I don't think anyone really cares about the vice president, generally speaking.
Especially Kamala. I
Yeah,
mean, what has
she,
she
but
been?
she has not got good ratings. Any, even in the demographics where you would expect her to excel. She does not because of her
I
history
mean,
as a DA, right?
whoever's controlling the general media for Kamala is doing an excellent job sandbagging her, because I feel like the last 15 videos I've seen of her is just her dancing at a party. Like, right? I mean, whoever has orchestrated that online is brilliant, because she's just a partier that just does nothing. You never hear about her in any
Well,
context.
not with the third party shit again, please. I can't.
The great thing about this discussion is that it's just between you and me, and we can ignore all of it.
Yeah, that's true. That's true. Gavin Newsom has not been a great governor of California. I think everybody in
Yeah,
California, left and right, can pretty much agree that Newsom is the worst.
he's tall and he speaks pretty,
He's
and
hiked
that's about
taxes and
it.
done nothing, right? And then he comes with the fear from Midwest and Southern Democrats that he was going to turn everything into California, which they all almost universally hate.
Yeah, it doesn't seem like the strongest of strategies, because California is going to be blue anyway, right? So,
Yeah, yeah. So I mean, but
yeah,
yeah, that is something that could come up in literally the next month or so. That would be a huge amount of risk for markets. I mean, if you wanted to talk about things that could catalyze a crash, that could definitely catalyze quite a lot of risk off. There's really specific peculiarities with the current the current Treasury and Fed, and how they're being run in an effort to protect banking risk, and how even a different Democrat candidate could flip that on its head. And I mean, Trump definitely intends to, right? He intends to come
yeah,
in, cut rates, lower issuance, right? And that means the banks are gonna fucking die. Like if Trump comes in and does that, it's going to kill the banks. But if another Democrat comes in and does that, it's also going to kill the banks.
the fun part is that none of them understand how any of this works, so they're probably going to screw it up somehow.
Well, yeah, you assume, or that's why there's such a strong interest in keeping Biden in office despite the obvious cognitive decline, right? Because
Yeah,
the
you
banks
want to
the
talk
banks will
about?
probably be backing Biden's bid for presidency.
Do you want to talk about what Janet Yellen's been doing recently besides shopping at Food Giant?
Yeah, I saw that she was like shopping at like Fresh Direct, which is a discount store, right? I would expect to see her at a Whole Foods, maybe.
Yeah,
I did
she's
I did notice that she brought her own bags.
yeah, that was very conservationist of her. Um, we're spending a lot of money. We gotta conserve somewhere.
Yeah.
But no, she's trying to push through um, you know, hundreds of millions of dollars, I think, which is not nothing. It's not a lot. It's not nothing for first time home buyers or distressed home buyers to get into mortgages. So she's actively working to continue to prop up assets. And I think that's kind of the opus moderandi of this Fed and Treasury, is no matter what, keep the assets up, which is exactly what we need to not stay up. So it'll be interesting if somebody tries to upset the apple cart there.
Ooh, here's a good question. Can you explain how lower rates destroys the banks? I thought that would save their underwater bags. Yeah, but it collapses all of their current leverage, right? So the carry trade immediately collapses, which might be sufficient to cause a market crash all on its own, considering how insanely over leveraged it is. And then additionally, we don't have control of inflation by any means. And if we cut rates, especially if we cut them rapidly, inflation is going to skyrocket. I mean, far, far beyond where it is now. I mean, we still have basically like what 20, it's like 26 months now of constantly increasing inflation with one flat month. Yeah, if they cut rates down to nothing, inflation's gonna just shoot up to like 9-10%. There's going to be
Yeah,
nothing in the way to stop it.
and this is another interesting piece of the election puzzle that might matter longer term. If Trump starts to crack down on the border because it's so safe right now, um, then that will drop productivity, which will put more of our GDP and government spending on the back of inflation just naturally, right?
Yeah.
I think a lot of their strategy to try to get themselves out of this money printing hole is just to let everybody through the border, which is pissing everybody off because all the new stuff that's growing the economy is going to other people, not the existing people,
Hmm.
which tends to make the existing people mad.
Yep.
um, So yeah, but if Trump shuts that down because it's highly unpopular, then we have this massive deficit spending and no population growth because our own population itself is not growing. So that I think will put a lot of pressure on inflation just from the measurement perspective. I think inflation's a lot higher than they're stating anyway. I think these massive changes in population are making it really difficult to seasonally adjust and even adjust between years and do calculations like what percent of our spending is growth versus inflation.
Yeah.
Um, and so but if that distorted effect gets closed, then I think it will become a lot clearer that more of it's on inflation than we've been projecting so far.
Yeah, I mean, I think you can look at the last round of seasonal adjustments and how extreme they were, right? As kind of maybe this is just the last ditch effort to try to prop this up for another couple more months, but I don't think anyone bought into it, right? Like, yields have stayed steady. Expect like the one print has had very little effect on the things you would have expected it to have an effect on, right? Even the SPX. I mean, the other declines in inflation we saw 3-5% upside moves on the S&P, or disinflation, right? And this one's, it's such a rapid drop that I think it's bred more fears of deflation than it has supported the idea that we're gonna get another round of disinflation. And I think I
Yeah,
think
well,
I
I
think
mean,
we
the
don't.
interesting thing is that deflation is well. So what's interesting is that any deflationary prints kind of send people over to bonds, except for there was a strong print on Friday which sent people right back out of bonds. But these deflationary prints, I think, are going to be intermittent, and I think right now it's really noisy, and it's too soon to say if there's actually any deflation occurring.
Yeah.
But at the end of the day, if we start getting deflation and we start getting a slowing economy while we're still spending a bunch of money, I mean, rates are going up eventually anyway. People can pile in all they want, but they're going to go up. Um, so yeah, it's not going to be pretty, right? I mean, deflation in an environment where we're spending a ton of money is not necessarily a good thing unless we are just growing like crazy, which we currently are, but I don't think we will continue to do that because it's so unpopular.
No, yeah, it's not looking like it's going to be able to be kept up for a lot longer. I mean, Treasury issuance is already way down this quarter. I think we can probably expect it to drop next quarter as well. We'll have that information coming up soon, right? Um, we're gonna get the we're gonna get all the information
Yeah,
from
well, I
the
mean, she's
upcoming
already it's
issuance.
already getting to the point where the short ended the shorter duration bonds are starting to look crappy at auction too. Like there's
Yeah.
only so much you can do on the short end. She's got to start spreading it out.
Well,
But
that's
the
why they
long ones are
implemented
also
the
have also
buyback.
been, for the most part, they've been abysmal. There was a 10 year that was an A plus recently, but that was during like I think it was a big forward wave of buying.
Yeah, it was that
Just kind
10-year
of got
issuance was
lucky.
like right in the middle of everybody freaking out about French oats.
Yeah. So I think again it's noisy. Yeah, it doesn't actually look good. everybody just hopes it is because it has been okay so far.
Also, to that note, everybody who bought the 10-year at that auction is underwater now.
Oh yeah, oh yeah. Dude, TLT almost hit a 2% move
Yeah,
on
yeah.
Friday.
TLC,
Insane.
big moves on bonds at the end of the week. Um,
Which are bullish, right?
no, no, no,
Yeah.
no. Yeah, the 10-year back to 4.4, like quick. It was not a slow climb. It gained 11 points on Friday, which is, I mean, it's a huge move, right? And
Yeah, that's fun.
we're down from that peak in mid-April, but not much, right? With all of the projections and everything, and the zero PCE and zero CPI prints, yields are still holding up. Like the bond market's not buying into the inflation narrative at all. What's up, poopy pants? Um, and I don't think anybody's really buying that the Fed is going to cut rates this year at this point, even though we're still pricing it in a little bit. I mean, it doesn't
Well, I
even
mean,
sound
more
like the
Fed
most.
members are now saying like, I don't think this year is going to be the year.
Well, yeah, that happened with the SEP at the last meeting, right? We got like far more clear division between 0 and 1 and 2 rate cuts. And the like 3 4 rate cut people all moderated, more hawkishly. And now you've got, you had like 4 presidents at 0, and then you had 8 at 1, and then the remainder at 2, right? And so now it's split far more hawkishly. And then even the more dovish Fed presidents are coming out, and even though they're projecting 2 rate cuts in the SEP, have been like, we don't really, we need to see a lot more data. And so even those 2 rate cut proponents are data reliant, and it doesn't look like the data is going to change much.
Yeah. Yeah, it'll be interesting to see. I mean, people just really want the Fed to react, and they simply can't. The data is too noisy and uncertain, and it's making a lot of people upset, but that's just the way it's going to be. So plan accordingly. The Fed will wait too long to make a move. That's just the nature of the system by design. It's too slow,
Yeah,
and the
yeah.
data is too noisy to create stability in this economy. And they keep trying because the timescales are long enough that everybody forgets, or they can blame it on something else, like these lags that are long and variable, so that they can be it's astrology at that point. Um, but yeah, that's
Do we want to talk about the what's been going on in correlation, like with the dispersion trade a little bit?
sure.
Because that's fucking going crazy. Um,
I mean, it's gotten to the point of absurdity, right?
yeah, yeah, it has. But the 3 month correlation's breaking down, right? When we're seeing like 3 month vol, like this is really similar to what we saw in June of last year, July of last year, and March of this year, where we see like near term dispersion come in to support the breakdown in longer term dispersion, right? And like that's generally been a top signal, and we're seeing that now, but the spread is insane, right? It's actually it's not as insane as it was in July just yet, but it's getting there.
Yeah, and I think the level itself says a lot too. It looks like this one's on a percent change.
Yeah,
I don't know how valuable it is in that view because you have to look at the absolute value of the.
yeah, it can
But anyway,
shift them.
I mean I believe the correlation is pretty close to zero right now, which is kind of insane, right? It means that in aggregate um, the stocks are. Oh, I got an ad for some dog stuff. Hold on. The ads are getting so overbearing. Yeah, so it basically shows that what we've been saying all along, as you squeeze the index flat, right? Historical volatility on the index is like 5. which is insane. Um, the 10-day at least. If you squeeze the index flat like that, but you're also going along the volatility on everything else, what happens is the index stays flat, and then everything else goes wild, but everything shoots out in different directions, randomly weighted by market cap. So then you get like crazy things like one day Amazon and Tesla are up 4%, right? And everybody's going crazy while Nvidia and Apple are down 2%,
Yeah.
and Microsoft's flat and Meta's flat, right? And then the next day you get like you roll the dice and you get a different random set of ones that go straight up and ones that go straight down. Um, and that's going to continue to happen until the volatility on the individual stocks are large enough that they create more volatility on the index than's being priced in.
Yeah.
And that's when it all just comes crashing down. Because then once people start to try to exit, then everything becomes very highly correlated as it all goes in the down direction. um, and then everybody just gets squeezed.
Poopy
But
Pants
yeah, you've
says,
got people. Yeah, I know. Poopies. Yes, people will buy TLT under 6 and they will make money, but they will not make more money than the risk free rate over time. Unless we get our spending under control, which is a gamble in and of itself, right? All right, Poopy Pants. We'll see. I'll see you in 20 years.
Poopy's
Anyway,
very convinced that things are gonna go back to normal.
well, because they always do.
Yeah.
Um, anyway, yeah. So this dispersion. I mean, there's people who've like traded vol for anywhere from a decade to decades who are like talking about how this is absolutely insane. Like the level of people in this dispersion trade and the amount that it has an effect on the market is a new high kind of thing.
Yeah, it
So
is.
we're in rarefied air, which I think is important to know because it doesn't mean it's going to come apart soon, but when it does come apart, it's probably going to be pretty crazy.
It's even worse than when Volmageddon happens.
Yep. Yes, it is.
Jesus. That's frightening.
Mm-hmm. Yeah, and nothing could go wrong.
And the spread is
But
like 30x. Like it's like it's so absurd. Yeah, I
what
mean,
even is this dispersion trade? So I'll very briefly explain it just so people know what the hell we're
oh,
talking
okay.
about. The idea is this: the volatility on the index, the volatility returns on the index, and the volatility returns on the individual stocks within that index are not the same. And so you can arbitrage that difference. So if you propose that you think that the volatility on the index, the realized vol, is going to come in smaller than the realized volatility of the sum of those stocks within the index, then you would go short vol on the index and long vol on the individual stocks. And the amount of that return, or how much you're going to return on that, depends on the correlation between the individual stocks and the index itself. So if they all move in the same direction, that's not great. That's not good for you. But if they all move in different randomly different directions or become uncorrelated, that is good for you.
Yeah.
So right now, or I guess the dispersion trade right now is currently winning to a degree that it is basically completely distorting the market and creating the outcome that they all are betting on, which will inevitably unwind once people start saying, okay, I made my money. These conditions don't look as good anymore. There's not as much, there's no more. There's no more meat on the bone, right? So why would anybody want to open up a new long dispersion trade at this point?
Yep.
So that marginal propensity to open up more becomes lower, and then the people who have made money on it are more likely to move out of that, say it's overcrowded, and look for other opportunities. And so
You also have
when that
like a
happens, it's
ton of variance risk that rears its head the more uncorrelated they become.
yeah. So when that happens, you have people who are one buying a whole bunch of index puts to close, which puts big downward pressure on the index. And they're also taking a lot of long puts and long calls on the individual stocks like Nvidia and Apple and those, which are most of the index. So it's convenient when you have this high concentration. You can you can mostly just manage that with just a few stocks. You don't have to buy all 500. You can look at just 10 or 20, just
Yeah.
kind of what's happening. But they're gonna close their long positions on that. And so right now, all of the value on those long positions is all in calls. So effectively, what they're going to be doing is they're going to be closing a bunch of long calls that have high delta.
Yep.
They'll also be closing a bunch of long puts that have low delta, but the net effect of that is also down. So when you come out of this dispersion trade where we are trading right now, the net effect is going to be pretty much straight down.
Yeah. There's not a lot of ways for this to unwind amicably at this point. It's not going to be a like a stable unwinding, especially with how much dispersion has increased since the last low and how much has been milked out of that. We're really pushing into like the boundary of stability in the market itself at this point, and we're starting to see that in the discorrelation between equities and bonds. Dollar value has been staying excessively high, and you know we're getting reduced volatility despite the constant shorting or longing of volatility in equities. Volatility, like realized volatility in equities, is falling. um
Yeah. Do we want to switch over to short term equities and why I think this trade is going to unwind sooner than later? Now that we just said that it can still take a long time to unwind.
yeah, sure.
um, yeah, so I'm really excited this week because 2 weeks ago I was all like, being a troll in the chat and saying, "Ooh, we're gonna crash." Last week when we said we are gonna crash, and then last Sunday I came out and was like, "Nah, we're gonna be flat." And lo and behold, we were flat. Um, but I think we got crashed back on.
You son of a bitch.
And the reason that I'm so excited is because I saw something that I haven't seen in a really long time, or hardly ever. um, so after a quarterly OPEX, generally the contract values and the delta on those contracts tend to drop a lot, but then they just start growing up towards the next OPEX.
Yep.
Um, for the first time in a long time, we haven't seen that happen. So actually, the contract values at OPEX were about 750 billion dollars, and that dropped at the end of OPEX to 550 billion. Then for a few days, it went up a little bit like it's supposed to, but then by the end of this week, it dropped, and now it's down to 495 billion. So we've lost an additional roughly 75 billion after the end of month expiration, which is pretty unusual. And almost all of this drop, both from OPEX and from this Friday, have all been pretty much in calls, all of it.
Yeah.
And then if you go and you look at the distribution, so I've showed people before the distribution of contract values in the market. Obviously, most of it's at the SPX monthlies. That's always, usually a little bit more than half or about half of the entire market. Then SPXW, the weeklies, are like 4%, SPY's like 3%. NVIDIA 2 weeks ago was like 12 and a half, almost 13%. Now it's down to 10%. Tesla's up. Tesla and Meta are up right now, but QQQ has dropped. It's now down to 2%. All of these memes are starting to drop in relative to the rest of the market, which shows that I think we are finally starting to see bulls' propensity to take profits and move away from these existing trades.
Risk off.
And if that's true, it's gonna be fun.
It's gonna be quite
So
fun.
you've got
Yeah.
all this. So you've got all this leverage in betting that the market's not going to go down at all. Which, by the way, I was looking at the time and sales for Friday, and people were selling puts into the drop the entire day till the very last second at market close. So still
Yep.
fighting every bip on the way down. I mean, the tender is just ripe for just instantaneous combustion, and it'll be so much fun if it happens. And there's a shot. So I'm excited. I'm not saying it's going to
Did
happen,
you just
but
knock
I
on some
see.
wood?
I did.
Nice. Look at
Yeah,
you, all suspicious.
I know. It's not even real wood. It's particle board. It doesn't count.
Yeah, yeah. So I mean, I also and we talked about this a couple days ago. And also kind of independently have come to a similar conclusion in that, you know, we are seeing short vol fight back, but they are failing at doing so, and we are losing the upward momentum and realized volatility on equities. We're seeing a lot of like near dated supportive positioning come in, but no long dated supportive
Mm-hmm.
positioning. And nobody's taking risk beyond like a 28-day horizon. Which tells you, you know, and we're seeing the risk beyond a 28-day horizon trim, right? And so that tells you that, you know, they are pulling back their long-term risk. Now, some of that could be the election. Some of that is definitely what's going on in Europe and the potential for another debt crisis there. Um, and, you know, some of that's also just that they are so over leveraged and overextended to an unbelievable degree that this is just not a sustainable. This is not sustainable, right? People are going to absolutely take profits here, because they're up. They're up so fucking much, right? You know, if we go just from October of last year, you know, the returns are 32% on the index, right? Which is you know, a good 5 years, realized in less than a year. um and you know, this makes people, honestly, this makes people more afraid than prices being flat or trending down, because um they're going to want to keep the money that they've made, right? And if they at any point here decide in large numbers to keep that money, um like Jay Fresh said, it's a powder keg to the downside. There's, I mean, you remember those short puts between 5,400 and 5,300. Those are still there. No one's closed
Yep.
those. And if we fall through those, the amount of delta that gets shed by the is going to lead to future selling like you would not believe. And then it just gets worse, right? You start to fall into the longer dated short put positioning, which they are trying to slowly pull back here, but they're not. I mean, there's not much they can do without spiking volatility, right? You can't pull back big swaths of that positioning without rocketing vol up. And so you lead to, you know, you see a lot of netting off of the short vol, but not a lot of rapid exiting, and that's simply because they can't, right? You just can't pull out of that kind of positioning at that speed without blowing up that positioning. And so, you know, we'll see those like intraday, like, you know, 20, 30 pip drop in one candle, right? And then, you know, they've pulled back a little bit, but not much. um and now we're getting long puts. I think that's something else that we should probably mention. It seems to be pretty consistent in the data at this point. People are going long puts, which basically never happens on indexes, right? Like from an institutional standpoint, nobody ever buys actual puts. Like if they do, it's hedged with another position, right? And there's pretty good signs that people are going synthetic short SPX at like 58, 5900 with a ton of leverage, and then short like 53, 5250, 5200. um and that started coming in last week. Not to mention there's just not any upside here really, right? I mean, outside of like a what $80 range to the upside, there's that's kind of it. I mean, you can't really drive prices up substantially here, because anytime you try to drive prices up, you're pushing the long vega, right? And then the starts dumping delta into every tick you move up. And if you keep trying to sell puts into that, you push them long, like shorter and shorter, right? Or longer and longer puts. And yeah, and so I fully agree that last week was a little too early, and we did get the supportive flows necessary to stay aloft after the OPEX. But this week we just saw more bleed off, and without that supportive position, we've talked about this so many times, like, oh my god, like 80 billion charm fell off and a trillion delta, right? And every time they've come in and they've supported it by the next like Monday, Tuesday, right after T+2, delta started to swell again on the chain, and they came in and they backed it up and they saved it, right? And this
Yeah,
time this
not this
time
week.
this time they didn't. And in fact, we actually got one of the largest, or the largest, um, expiration of delta ever on the quad witching, and then probably I think one of the largest SPXW expirations this week.
Yeah, it was
Yeah,
pretty big.
it was big.
Which was weird in and of itself. I mean, I know. So the only thing that I think about is end of quarter, right? And there could still be a chance that there's people there that are going to come in the new quarter and prop it up this week. But yeah, but I still think that there's also a good chance that people are just taking their ball and leaving because they made their gains quarter end, get out and move on to something
What's
else.
stopping them from coming back and buying through this low volume week? Well, they can, and they can continue to support it, but they're not supporting it in the long term, right? So I mean, it's kind of like,
Yeah, and the challenge is too. This is all levered, right? So you can lose all of the money you've just made, right? So as we go higher and higher, there's more and more people. That's why he's saying like people start to become more fearful because they want to maintain what they've gained. They just took on a ton of risk and it paid off huge, and they would have to take on the same level of risk to continue to push this up. But they know at the end of the day they could lose. They could like 10x or more of their losses, right? So they could lose everything that they've gained and more with the strategy that they're employing.
I mean, I think at
So
this point they
there
could just
is
lose everything.
yeah, so there is a tendency to want to pull back that risk because they're like, man, we took on a lot of risk and it paid off and it was awesome. We should never do that again. That I think that kind of thing is happening a little bit at least.
That's kind of my thought, that we get one last breath of bull this week. It depends on how bad tomorrow and Tuesday are. We're already we're already at a level now. Now, pushing up here has allowed one thing for short vol that should be noted, and that it's reduced total Vega exposure, because the contracts they've sold, the majority of them are so far out of the money, right? But any increase in volatility, any drop to the downside, and that Vega exposure is going to go up, and not just a little bit, right? Like a week ago, we were touching all-time high exposure on the market makers for Vega, right? And this little break up that we got, um, back on the little gap up we got on the 11th, lifted a lot of that risk. It put those short calls, at 4,300 far enough out of the money that they weren't posing, or far enough in the money that they weren't posing as much of a threat anymore. It put the short puts down at like 4250, 4300, 4350, far enough out of the money that they weren't picking up as much Vega, right? And so the exposure drops because the moneyness of those options has changed. But if the moneyness of those options shifts the other way, we're going to go right back to those all-time high Vega exposures, like in one day. And on SPXW, because they have to sell in the shorter term, that exposure is already really high, right? And so the exposure on those longer dated contracts is going to rocket up. Are you looking at October for new Vega puts then, or further? I haven't really had an opportunity to enter them. I've rolled a little bit of my position on Friday, early in the day over to October. Um, but I still have my September. Like I still have all of my September puts. I think they're probably going to be fine. I don't think we'll be able to sustain a low volatility environment in this range for very long. And I only need like 3 month VIX to hit 1550 for those to start paying off. Even with only 88 days or whatever to expiry.
Yeah, it's gonna be fun.
So do we want to do a couple predictions then? Dork wasn't joining us, but he did weigh in with his prediction, which I don't think I understand. But
Wait, did I win last week?
I don't know.
I think I did.
You were up here.
Hold on. Somebody confirm this.
And I was a bit far off.
5350.
Yeah,
Yeah.
you're
So I was
closer.
at 55. I was like at 5501, I think. So
Yeah.
I think I won. Did I? Yeah.
Yep.
Okay. Cool. Not bad.
Not bad. And then Dork
Finally.
Dork did not.
Well, Dork was just like straight down.
Yeah.
I guess it was just there it is. All right, so take Dorks, move it over 1 week, and change it white.
Sure.
I mean, I guess. Why not? It'll be fun. Dork's not here, so I'm stealing his prediction.
There you go. All right. What was Dork's? What did he want?
I don't know. Where did he send it?
Hold on. I think you put it in general. No. Oh, I found it. It is here. JFresh prediction.
My prediction for JFresh's prediction is flat. My prediction is down 150 BPS on the week with some stupid up stuff on Wednesday.
Okay, so he wants mine from last week, right? No.
Roughly, yeah.
No, it's not. So he wants down into Tuesday, and then some up stuff.
50 bits right now.
Up stuff Wednesday.
60.
It should be like right there, right? Hold on.
He wants a $230 move.
That was close.
So
it's like 5380 end of week.
Yeah, 5230 is what he wants.
5230?
Right? Because he wants a $230 move, right?
And it's 150 bips on the week, which is like 5380.
Oh, shoot. My calculation is stupid. Yeah, okay. He wants an $80 move.
And then that's I don't know what the fuck he wants us to bounce back to. Some stupid
something stuff. Stupid.
All right. I'll just put like a spike.
I mean, do 5460 because that's like kind of where they've wanted to salvage everything.
Yeah, all right. That makes sense.
Or 54.50, something like that.
Yeah, let's put there. What would Bulgurk do? Bulgurk would just be flat. I don't want to be. I don't want to be Bulgurk. Oh, wait, I gotta trim yours because there's only 4 trading days this week.
Are you serious again? What's
Yeah,
the holiday?
July 4th. There's actually 3.5 trading days this week.
Oh, duh. Yeah, my daycare is closed on July 5th too, which I think is BS. What the hell? It's not a holiday. Also, I'm starting to get sick. I think my wife gave me AIDS.
Son of a bitch.
I'm like getting progressively sicker as we have this call, which is a little unsettling. Rapid onset AIDS. At least I got it from the source, Magic Johnson.
That's me. This is Dork.
Does any strain of AIDS have a higher pedigree than Magic Johnson's? Like living strain?
Okay, I'm pretty comfortable with that. Uh, there. Okay. Airborne variant? That's not a thing. Nuke France? What? Macron's group set for 60 to 138 seats in French vote. Estimates? Ooh, that's bad. Uh-oh. Hold on. What was
Market crash?
Yeah, what was yours? What was your low? I'm gonna go a little lower. What's the bottom of the new collar?
You son of a bitch.
5,200? Something like that. When's the election
Everybody,
finalized? Hold on, I gotta look this up now.
everybody in this cult is going to lose so much money next week when we rip to 55.50.
I mean, I'm not because I just have mega puts and then everything else is straddles. Imagine if you just straddled the market every day for the last year and a half. You know how much money you'd have made?
As whatever amount you made.
Yeah, that's right.
Yeah. I mean, it's not fair though. It's not like you told anybody your strategy
For
every
every
week.
day. I know. Well, that's because I wanted to keep it to myself.
Yeah, I mean that's what all good streamers do.
Yeah. Okay, hold on. So when the fuck is this election over? The first round of voting began. The second round's on July 7th. Okay, so we got a little bit of
Yeah.
time. I don't have to do this crazy prediction yet.
Can you just undo?
Yeah, that's what I did.
Oh, good.
There we go. There's the quant dot plot for this week.
Looks a lot like last week.
Kind of, yeah. Well, I don't know. I was, actually, if you took my prediction from last week and overlaid it on futures, it was fucking perfect. It's just all the overnight moves weren't realized on SPX.
Yeah. All right. Well, I can't wait to get off this call and tell my wife that I'm getting sick and see the look on her face when she realizes that the tables are.
The tables have turned. Ooh, that means
Yeah,
you get to be like more sick than her, and she has to watch the kids, right?
you're right. And I
Oh,
get to lay in bed.
well done. So now you're gonna get like a little mini staycation. Congratulations. See, Magic Johnson did help you out.
Yeah.
Yeah.
If you can find her. Yeah. I've heard her out there. But yeah, for a little bit there, for like a good solid 20 minutes, my kids could not find her, which is,
Do you
we
ever
don't
just
live.
get a cold and then lay in your pool all week?
Yeah, I've done that before.
That sounds awesome.
Yeah. Dude, having a pool is, everybody told me my whole life that it was a huge waste of money. It burns money. It's not worth it. Find a friend with a pool.
It's worth every penny.
The pool is worth every goddamn penny.
Yeah. I just spent like fucking 50 grand on my pool. I don't even live there, but it's mine.
Yeah.
I'm gonna sell it to someone else, but it's nice having it for the time being.
I mean, when I go outside
Oh yeah,
without a
I
pool,
fucking I fucking used
I'm
it.
just like, this is awful. And then when I go outside and go in the pool, I'm like, this is fantastic.
I went out there with
Really?
like some friends yesterday morning, and we fucking swam and cooked meats on my barbecue that I've only used once now. Uh, and then like the girls we invited were like, "Why is there no furniture inside?" And we were like, "Don't worry about it." So it was
All it needs is a couple of industrial freezers
yeah, right? It would be perfect.
to really round out the vibe.
But it's pretty nice.
All right, well, I'm gonna go slowly die of AIDS, I guess.
All right, man. Well, I wish you the best.
Or
I hope you feel better tomorrow. Take some Dayquil and some like vitamin C or something. Zinc. I don't know. Whatever. I'm sure there's some homeopathic solution.
whatever Linus Pauling says to do, I'll do it.
All right. Perfect.
All right.
Later, man.
Always fun. See you at 5
See you, dude.
or 6 for
Yeah.
futures.
Yeah. Well, we have that other thing too, which you're gonna be sick during.
Yeah.
All right.
I'm gonna try to be in my pool for that thing.
All right. Later, man.
See ya.
All right, guys. If you have any more questions and I didn't get to them, feel free to reach out to me on the Discord. I will try to answer them. I should be around for most of the day, working on Pickle's picks and stuff. And then I hope everybody enjoys the rest of their weekend. I'll see you later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's not
Where
mine.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Sit, Crean, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show.
Not an advisor. Frigulond.